Hello and welcome to today's daily education here at Forex Academy. I am your host, Robert Blackwell, and have the pleasure to walk you through today's daily education. Now, before we do so, please consult the following disclaimer. There is, of course, risk involved trading the financial markets. On the content of today's particular daily educational video, we'll be discussing trade war technicals. Okay, some fundamental news really affecting the markets at the moment, particularly those US equity markets. We'll look to see if the technicals stack up with the fundamental backdrop of these markets. Okay, so let us go into our JFX trading platform. And of course, we're going to have an overview of the overall equity market structure at the moment. Okay, Japanese yen, first of all, with the Japanese Nikkei 225, first of all, we can see this market trading to the downside. Okay, it's broken its last support here at technical levels around our 21974 level. Okay, so we're seeing some continued weakness again with Asian markets as seeing their decline continue over the short term. Now, what I want to bring your attention to is the US equity markets because they're at a kind of an inflection point, if you will. I'll just remove my market watch here. This is the S&P 500. You can see how it's trading on that technical basis. Okay, we've had all-time lows here. Now we're really starting to reverse with this zigzag motion down. We're at this inflection point here. But the leading indicator for me, guys, in terms of spotting weakness in this market is actually the Dow Jones Industrial Average. Okay, and this is the technical level we find ourselves now. Okay, we know that the trade war rhetoric is going to introduce tariffs for metal-based products. It's going to really impact the manufacturing companies and the construction companies within the US Dow Jones Industrial Average, the 30 companies within. Okay, so that's had a real impact. You can see that ultimately the level of weakness that this market has seen. Okay, the S&P has rolled over to the same levels it was at there around May time here, just at the end of May. Whilst if we look at the weakness in the US 30, the Dow Jones Industrial Average, guys, you can see effectively here are the lows of May, just the same period, May, towards the end, 24th, 30th of May. We've now retraced this level, and now we find ourselves at a lower inflection point off this resistance level. So, guys, what do we think? Do the technical stack up here for a long-term buy position in this market, or if we're likely to see very, very strong rhetoric, very strong taxes and tariffs being imposed, guys, if we get a break of this level, we might see the US stocks really trade lower for the first time in terms of a trend in a long time. Of course, this is our correction in February time. Very significant amount of volatility coming into these markets. Now we've had a retrace of such levels, but volatility really coming back into this market for such a long period of time. Okay, we have seen signals where we could get a continuation from a bounce of such levels, and we've seen some more strength come back into the markets. Okay, but now, guys, with this trade war rhetoric really starting to ensue, we have the deadline for, I believe, Friday the 6th of July for these US tariffs to be imposed. And then the question for market participants is, what is the retaliation going to be like from the Chinese government in terms of their own sanctions as well? So my question, guys, is if we come towards the deadline, the 6th of July deadline, and we don't get very strong tariffs imposed, perhaps we get some tariffs imposed, but likely to be less than expected, we might get this starting to shift off. And if that is the case, the fundamentals will stack up with this technical level for a buy opportunity. Okay, if we get something softer, let's say we get, of course, tariffs being imposed, but they're not as tough, I should say, or as harsh as expected, then the Chinese government comes back and says, well, okay, we will impose some of our own tariffs just to retaliate, but they're going to be laxed as well in terms of not looking to spark a continued trade war. Then we're likely to see this market actually reverse off these technical levels, guys, and we're likely to see some bullish activity, and that would be my trade call for nominal levels up here right to the 25,400 level just at these highs here. If I can just put in my level of support and resistance again at nominal levels there. Okay, so try and disseminate this news flow coming out in the next week or so. See how the price action trades in and around these levels. Then you might get the best technical trade setup for some of these markets with the S&P and the US Dow Jones 30. Considering this is going to be a US equity news story, of course, fundamentally affecting those shares in the United States and fundamentally affecting the overall macroeconomic environment in the US, guys, you are looking for a trade in the US shares, okay, share market. You can see the FTSE showing some strength today in the German DAX, so showing some strength off these levels. Let's see how the markets trade over the next few days to see if we can get a technical buy off these levels. If we get the sell trade again, if it's going to be a really, really poor news story and there's going to be very, very harsh sanctions imposed, well, we may look to trade the breakout from these levels. So remain objective, guys. We are at price consolidation right here. But we're hoping here that we can get a real good purchase from these levels here for a good buy trade to nominal levels and beyond. Again, let's properly try as traders to disseminate this news as it comes into the market over the next few days.